Hello and welcome to Rajya Sabha Television. You're watching The Big Picture with me, Frank Pereira. Now, President Pranab Mukherjee today approved an ordinance on non-performing assets which will provide greater powers to the Reserve Bank of India to tackle mounting bad loans. Earlier, the Cabinet had approved promulgation of the ordinance to amend the Banking Regulation Act for resolution of the non-performing asset crisis. Finance Secretary Ashok Lavasa said that the amendments to the Act will help in effectively resolving the bad loans problem. Banks are struggling with non-performing assets worth nearly 7 lakh crore rupees. Former RBI Governor Ranjan had initiated the process of asset quality review in 2015 to recognize the bad loans with a deadline to banks to clean up their balance sheets by March 2017. But the problem continues to plague the economy. On this edition of The Big Picture, we will analyze the impact of the new banking ordinance. Joining me on the program today are CM Vasudev, former Finance Secretary, Renu, Kohli, former staff member RBI and International Monetary Fund, Priya Ranjan, senior journalist, and Sanjeev Gupta, MD NEXGEN Financial Solutions and Chairman Banking PhD Chambers of Commerce and Industry. Thank you to all my guests for joining me on this edition of The Big Picture. I'd like to start with Mr. Vasudev. Mr. Vasudev, what do you make of the new banking ordinance?
You know, what feeling one gets is that the government's diagnosis of the problem is that there are a large number of, or a large proportion of NPAs, probably mainly in the public sector banks, where the problem with regard to recovery is on account of issues in the real sector. They are not willful defaulters, but the problem is in the real sector. And the banks are not able to take decisions which normally bankers should take in such situation of taking a haircut, settling the account and moving forward, or taking over the assets, going for liquidation of the borrowing companies, and which is the normal process. And the government's diagnosis seems to be that the bank's senior management or the board of directors are too risk averse and they are not taking the needed decisions, and therefore NPAs continue to remain on the books of the banks, with the result the economy is suffering. So the government thinks that by bringing in RBI into the picture, by giving enabling it to give directions to these banks to settle these accounts, set up some committees to give a buffer for decision making, can solve the problem. But I think it raises a lot of questions. I feel that it is a problem of the public sector banks, and bringing in the central bank or the Reserve Bank of India to do operational issues. It's not NPAs have not been created by RBI sort of decisions. They are decisions taken by the banks or the real sector problems or policy problems which government may have been responsible to some extent. So to bring a regulator into this matter to give directions to the banks, how to settle accounts, how much haircut to take, what committees to set up, this type of backseat management by the RBI perhaps is not a very good thing in the long run. If the problem is, as the government seems to think it is, and it is mainly confined to the public sector banks, then the government should have done things itself without bringing the RBI, giving directions to banks to set up committees, give them buffers so that they take more decisions, because which decisions they are not taking for fear of CVC inquiries or CBI inquiries. So government should provide that buffer. Bringing in a regulator into that, I think, is not a very good thing in the long run.
Fair enough.
Secondly, if you are going to provide these buffers to the management of public sector banks, you are going to make them even more risk averse in the future.
Sure.
So I don't know whether this is really going to solve the problem. Okay,
fair enough. Ms. Kohli, you know, that's a very valid point that Mr. Vasudev is making about, you know, the RBI getting into a role of a micromanager of sorts. And that's what the RBI is getting into now, micromanagement. And clearly, that's not the role of the RBI, is it?
I agree fully with the comments of Mr. Vasudev, and he's raised very valid issues. Apart from that, the role, if we see directionally, the direction of reforms in the financial sector and the overall, you know, connections, interconnectedness of the financial sector between the public and the private balance sheets, or for the regulator, the overall public sector balance sheet. The directionally there has been, the effort has been to increasingly put the regulator and the owners, etc., at arm's length, which is not to say that the RBI is completely away distance, but still the direction has been there, and this is a reverse direction. The second thing, right, while the contours of the agreement are yet to be made public and details are not yet known, it also seems that public sector enterprises, CPSEs, will be asked to take over some of the assets. Now that is a kind of how to put it, a kind of a nationalization of sorts, which itself raises many questions. Micromanagement, yes, these are, at the end of the day, these are commercial decisions. There is also news that Joint Lenders Forum will be given directions by the RBI. Now, you know, if 20 banks have financed one particular large project and they cannot come to a consensus, or the consensus is being eluded explicitly through the interference or connections of one part of the lender segment with the promoters, then itself that is not a good thing. The fourth thing is to do with the restructuring and the existing resolution mechanisms. And what is coming out is that apparently some kind of flexibility may be given in the existing resolution frameworks like the 525 scheme, the Joint Lenders Forum, the S4A process, etc. That is something that the bankers have been demanding, and in the past the criticism has been that giving them more flexibility, which distills down to you know, letting the promoters off with lesser penalties or no penalties, or etc. So it's not very different, substantively very different from the past resolution. So, you know, is there anything that has changed? So these are issues that are come up while that are likely to come up. And last of all, you know, without wanting to sound pessimistic, the thing is that there is a lot of anticipation and excitement that, okay, at last things will get resolved.
Yes.
If we just look back in the past 3-4 years, we had the same kind of anticipation when the 525 scheme was launched, when the S4A scheme was initiated, and prior to that, the Joint Lenders Forum, and itself, like last year, when the asset quality review took place in such a fast manner, then expectation was that that means that there was a full plan, and resolution will also, you know, likewise follow in a very rapid way.
Right.
But nothing has happened. So, you know, let's see how it pans out. For all we know, I mean, at the end of the day, even in the central bank, we have technocrats, and to what extent do they want to take decisions? But what is clear is that the sense what we are getting is that there is an attempt to sort of distribute or diversify and take decisions regarding which can be very controversial, which is to do with the price at which these assets ought to be offloaded, which is basically the haircut or the discount at which the banks should do it, and rating agencies will be brought in. So, you know, we don't know how it's going to work out. Past experience has not been so good.
Indeed, past experience has not been good, Mr. Gupta, and you know, NPAs have been a problem that have been plaguing the system for a long time now. Several measures were tried over the last 5 years, as Renu Kohli was pointing out, but none of them seem to have worked. What's to say that this too is going to go down the same way?
I think so. Very interesting starting point. I think so. With around 7 lakh crores, 7 trillion rupees of plus at least, and some estimated to be around 9.27 lakh crores of stressed asset stroke NPA in the system today, we are really eye to eye with a problem which is larger than what we could have. And it's completely choked the system as of now. I think all my learned other co-panelists have already brought that issue out. You know, the problem is so large that even bankers are very, and these are very seasoned bankers who grew into the system many years, I would call decades of experience behind them, not ready to take decisions. This government probably looks very clearly, very aggressively poised to solve it once and for all. Let me also bring out that, you know, till now, not great efforts have actually been launched on resolving the assets. We are all talking about restructuring. So all the schemes that all of us have been following till now, whether it is the flexible structuring, which is famously called 525, or what we have otherwise seen, the S4A, the stressed assets resolution scheme, so on and so forth. I mean, we are all talking about restructuring. Where has restructuring brought us? We do one restructuring, we almost say that we defer the problem for some time. So it looks very good at that point of time, and everyone takes laurels and credits and everything, and we go down the press and a great celebration. Where has it brought the country today? We are still choking with the entire bad loans, stressed assets. We are all discussing, let's create a bad bank itself. What will it do? We all have those RCLs and the restructuring companies, but nothing is resolved. And yes, why are the bankers not able to decide? And what is the government wanting to do? Let's see it in just 1 minute and we'll understand. For I think the first time, the government is saying that we will, if need be, give clear directions, appoint clear committees, and before this ordinance has come in, before this has been now, this act has now become applicable, they have actually already done the insolvency and the banking regulation code. So, and if you see, the default actually has been defined in this one, linked to that. So we are already talking about expert committees being appointed through RBI, helping banks take a decision. So whatever the banks are fearing that if they decide, they will get into some questions, the haircuts are essential. Today, one thing we must realize that unless this system gets cleaned up, and I'll tell you frankly from the industrial experience, which is what you were wanting also. So let me give you a clear perspective from the industry's perspective. If an asset has become an NPA, suddenly the country turns, and this NPA could be for a lot of reasons. The decisions did not get done is one very clear thing. Second, the offtake of certain commodities, like for example power, is not to that level. One sector which I think I've clearly been practicing, and some of our members in the chambers of commerce and the industry, for example, we see every day they come up with problems that one of our asset is not performing.
Right.
That's become an NPA. They did try their level best to bring whatever money they could, but they cannot make the other businesses suffer for the want of this. Now it has become, let's say, stressed first and then maybe an NPA. The whole system suddenly chokes them down.
Sure.
And they know that it can revive. There are certain, deficiencies, obviously, why it is not working and why it is not performing. They try and explain it to the bankers. The bankers say it does not fit into any scheme. We cannot decide. We are writing to RBI. We're not getting a decision back. And I'm telling you a practical case actually. So what is the government doing? And if you see how it will resolve, I will just, how we are expectant of that. And I'll answer your most important question. I'm coming to that.
Very quickly though, because I'm running out of time.
So what the government is trying to do is allow RBI to step in and say, okay, we will bring experts, we will let you have that panel and take a view, and you can directly communicate back with us and give a proposal that works best to resolve this.
Fair
So
enough.
how will it change the situation is because of now the overarching presence directly of RBI, which is what gives you the regulations and everything, and you can go back and forth with them. I see a great hope and chance for the first time that this NPA resolution can actually work.
Sure. Mr. Dash, is that the way forward? More powers to the RBI? Clearly, that's not the way forward, is it?
Well, this to me looks like a desperate solution for desperate situation. You see that so far we've had omnibus kind of guidelines applying to borrowers in general, and those kind of regulations. But here there is an attempt to look at pick specific cases and try and reach a solution. Now clearly, since case by case, flexibilities have to be shown in the overall regulatory norms. These will be very controversial, okay, and not quite desirable to. I quite agree with Mr. Vasudev that to be dragging the regulator into it. Now, in the past, faced with such situations, we've in the government, for instance, the government has done things either on its own for specific cases or for specific sectors by way of a debt restructuring or those kind of things. But this is actually being because of the risk aversion one sees among the bankers. These should be the normal kind of banking decisions that you should be taking as to what do you do when an asset goes bad.
Right.
And you should be taking that decision. But since there is risk aversion in taking those decisions, some kind of a way is being looked at, and RBI is being brought in, and this overseeing committees system is being talked about. Now, I don't know, because this is of course an ordinance, because Parliament is not in session. But it has to, the Banking Regulation Act, which this ordinance amends, has to go to Parliament. And there are questions that would be raised.
Sure.
And these are political questions too, and quite legitimate to my mind. Those will be raised, particularly following the demonetization, the decision to demonetize. And where we know that the opposition at least has viewed demonetization as a step where it is actually taking money from common people.
Sure.
And then, opposition has seen a conspiracy in that
Indeed.
that money is now going to be used for giving the corporate sector debt waiver, as they call it. So those kind of political questions are also involved, and eventually, the risk aversion that we see today of even on this part of the government to take a call. That's how they are putting it on, firing from the shoulder of Reserve Bank of India, because that is because of the political risk.
Fair enough. Some tough questions are going to be asked in the near future, is what you're suggesting, and of course the government will have to answer them in Parliament.
It's not a systemic reform that you are attempting to do.
Fair enough.
Where you would actually encourage the banks to take commercial decisions based on their best commercial judgments, subject to all the regulations
Sure.
of prudential banking.
Sure. Mr. Vasudev, let's get to the root of the problem now and discuss, NPAs as such, and what has caused this steady rise in NPAs over the years. What is it that is choking the system so much?
There are two types of NPAs which are obtaining in the system today. One, of course, is driven by willful defaulters who have diverted the money for other businesses and stripped assets and all that. So there is a I think, thought out system to deal with willful defaulters, filing criminal cases and taking them to court. And I don't think this ordinance seeks to address the cases of willful defaulters. The other set of NPAs, which it appears is a larger proportion today, have been caused by problems in the real sector, which may be because of the global economy, which may be because of policy impediments, some policy risks which are there, some judicial decisions or environmental issues. People have started projects on the basis of certain understandings, and the environment decisions were delayed for years, and they had borrowed money so that they can. So those type of problems of NPAs arising out of policy impediments or problems in the real sector, that is the one that is supposed to be tackled through this ordinance. But I think the point that needs to be appreciated is that one has a lot of sympathy with the public sector banks. I have dealt a lot with them. What is happening is that even bona fide commercial decisions, which can go wrong for these type of problems, they are often tainted with criminality.
Sure.
And they are hauled up by CBI or CVC and all that. So for that reason, they are not willing to take these decisions which are needed to deal with these problems by taking a haircut and moving on and let the project move on. Now, there is a need for providing a buffer to these managements of these public sector banks, so that these bona fide commercial decisions are protected. They are protected for that. There could be some committees which could be set up that before CBI comes in or CVC comes in, some committee of the type that is now being mentioned with RBI and others who need to be consulted before CBI can come in.
Sure.
So that then that committee can do the sifting and come to some determination whether it was a bona fide commercial decision or a malified commercial decision. So those type of buffers need to be provided. But this solution which the government has now come out with the RBI trying to deal with the NPAs by giving directives to the banks, may be a very big compromise for the regulator's role. I think as a public sector bank's owner, the government should come in directly and set up those committees and provide a buffer to the decision making in the public sector banks so that these bona fide decisions are taken, NPAs are settled, haircuts are taken, or other measures to attach the assets are taken.
Right.
And so the system forward.
I'm sorry to cut you short there, Mr. Vasudev, but Mr. Gupta wants to make a point.
A solution which is worse than the problem.
Right, fair enough. Your point taken. Yes, Mr. Gupta.
No, so I think he's very rightly saying that the government should move forward and do all what he's recommending. And I think we should realize one thing here, that government has a regulator called RBI. That makes the policies, sets up all the regulations that the banks have to follow. My feeling is that once the
Mr.
RBI...
Dash was pointing out, is the government shooting from the shoulder of the RBI?
No, it's not shooting from the shoulders. You see, if the government decides that they want to do something, who's the repository of this entire information and who's the one which actually knows what is best for the banking system, as also for the industry for that matter? Now, I think RBI is in the unique position as a regulator, also as a government's banker. Let's not forget that it is in the dual role here. And as in that position, they know what is best in that sense. And using that to leverage this entire thing, they have already given them powers to even appoint committees, special committees through this ordinance. And they will use the expertise for each sector. For example, a problem related to steel project.
I can see, as you speak, I can see Mr. Dash shaking his head in disagreement with what you have to say.
I am open to that, but allow me to...
Yeah, I'll allow you. Let him say what he has to say, and then you can respond to what.
Sure, please.
I was saying that RBI has hardly got the expertise to make commercial decisions or be part of it. They are a regulator. They definitely supervise the banks. And in fact, their role and their credibility will come to question if they take up such roles of directing banks to provide X amount of haircut in Y case and things like that. Then their regulator as the auditor of the bank, that will be in public view, that will be a questionable thing. You see, I'm afraid that this kind of a thing, closely on the reputational hit that Reserve Bank has taken because of the demonetization the process. Now this will deliver another body blow, which is not good at all. They for restructuring debt and stressed assets and things. In the past, we've had several experiments of institutions which have been created to deal with such situations.
Right.
Independent bodies, quasi-judicial bodies, many attempts have been made, and so I don't see that why RBI as an independent regulator should be made to do such thing.
The gentlemen to my right are both in disagreement with each other's point of view. A quick counter, Mr. Gupta, and then I'm going to move on.
Yeah, sure, please. So I think Mr. Dash is rightly saying, sir, that is it that RBI is going to get into micromanagement? I think that's not the objective. We are all mixing up in that sense, because it's not that RBI has got to get into each specific case or something of that kind. Let's see the whole setup. All the regulations that we are talking about, which the banks are supposed to follow for restructuring and whatever else, even structuring for that matter, are all RBI driven. And let's not forget that. So here again, the only thing that is desired is that it should happen more aggressively whatever support is required and the definition clarities, wherever the banks are not able to decide, they push it back into the system, scale it up to RBI, and RBI needs to actually help them back. That's all.
Okay, fair enough.
So I'm not saying that they're getting into
Ms. Kohli,
micromanagement to that
what's
extent.
the way forward now? Let's let the gentleman be for a while now and then talk about the way forward.
It's hard to think of a way forward. I tend to think that there comes a time when you have to, like bite the bullet, and which in the rightful task is that of the government. I do think that, if I may say so, that there has been a certain misjudgment and mishandling of this entire issue of NPAs. Misjudgment in the sense that the NPA problem was there in 13-14, particularly, because of the non-tradable sector exposure to the exchange rate, and the large correction that we saw automatically inflated the debt which was incurred in foreign currency. The whole issue has been discussed. Individual borrower accounts have been discussed publicly. And when these matters come out in the public, then we will see the response that we do, which is the intense risk aversion. So any decision subsequently of each individual instance is also bound to be discussed publicly. So that is something that we all have to live with. So, in deciding the way forward or thinking of that, one has to incorporate or factor that in. The second is that in all this discourse, the focus has been the belief in the public and in general has been fostered, which is that all these bad loans represent malfeasance. Now, if we were to rewind back to 2009 and 10, when much of these infrastructure projects were financed, there were two things. One is that the exposure norms of lending to infrastructure were relaxed by none other than the Reserve Bank itself.
Sure.
Right? So the banks were encouraged to lend to the infrastructure because that was the financing. Post-crisis, there was a slowdown, external demand was out, and therefore the reliance for growth was predicated only upon domestic demand. Now that context has been buried and it has not been discussed at all. The second is that 2009-10, everyone, including the IMF, which is the most followed international agency as far as GDP forecasts are concerned, all had forecasts which subsequently in hindsight proved to be very, very over-optimistic. It was common in those days, in 2009, for India's potential growth rate to be assessed, including by the central bank and official and national and international agencies forecast to be that India's potential was 8 to 8.5%, and therefore, so businessmen at the end of the day, or for that matter, even bankers who appraise loans, they don't do their own GDP forecasts. They very much take the lead. So all this, in fact, the IMF like 4 years ago, because its GDP predictions, world demand projections were proving to be over optimistic, and it was having to scale down its GDP forecast in middle into each year, went into this issue, revisited it, and with great honesty, it found out that much of it came from higher potential output growth, output estimations of countries, particularly India, China, Brazil.
Sure.
So, these things have happened, and that has not figured appropriately in this entire discussion. So you have a situation now, everybody, this is malfeasance and these are not genuine thing, and in hindsight, what was a boom and has come into a collapse.
I'd love to give everyone else on this program time to speak, but unfortunately we have completely run out of time on this edition of The Big Picture, so I'll have to call it at that. I'd like to thank all my guests, CM Vasudev, Renu, Kohli, Priya, Ranjan, and Sanjeev, Gupta for joining me on the program and putting things into perspective for us. That's all the time we have. Thank you so much for watching. See you again next time. Thank you.